all the bugs and pollen will probably, well, the bugs have beat a hasty retreat, and the pollen's probably on the way down too. So, um, we have had frost, but we've been a little late this year. La Nina continues to impact the southern central plains with warmer than normal temperatures and less than normal moisture. So here we are. E-mini was weak overnight. The sellings started yesterday late on the widening debt spreads between French and Pig's paper and the German Bund. There's a lot of papering over and glossing over on the surface to buy time going on, but the battle is between France and Germany and who's going to pay for not only France's bad decisions on buying Pig's debt, but Pig's debt. And the issue is the same as it's always been. It takes roughly $3 trillion worth of euros to absorb all the bad debt, the paper that's been written since 2000. Between now and the end of the year in Pigs Nations in France, there's 104 new debt offerings. The only hard money that's been pledged is 440 billion euros. Germany is the largest. France is the second largest. They have been given permission to leverage that twice. So the European Central Bank, with their emergency rescue funds, got about $1.3 trillion worth of ammunition, and they have been the buyers of Italian and now Spanish debt, and it looks like they're soon to be buyers of French debt. So the great speeches, I mean, we get a new government in Italy, fine. They pass an austerity budget, fine. Get a new government in Greece, fine. They pass an austerity budget, fine, but will they abide by it? And Greece has not abided by any of the rules or the restrictions or specifications put on them since joining the EU. And Italy probably has glossed over a few. So, I mean, it's tough. I mean, you're looking for a big cut in standard of living in the Pigs Nation, and maybe coming to France too. And you will see a cut in the standard of living in Northern Europe through higher taxes. So boil that all together, devaluation of the currencies is the way it historically has been settled. People are anticipating some form of devaluation, and then equity owners will get more than a haircut in the large major European banks, and then European taxpayers will come along and will pick up the pieces. So that's kind of where we are. OIC, I don't understand what estimates I'm reporting today. Clarify, please. So right now we've got news on the plate. They're looking for, I've seen two estimates for jobless claims. 395 seems to be the consensus this morning. If it comes in greater than 405, help the financials, hurt the E-mini. Housing starts are forecast at 604. That number could come in higher than forecast as builders in the Northeast and the northern states break ground and get the foundations in so they can build over the winter. Permits at 603, that's probably relatively close. Then we move to Philly Fed. The Empire Index was minus 8.5%. Grew at plus 0.6% last month. Philly Fed is forecast at 7.5. That number could come in higher. LEI, because of the interest components and the stock market market components usually is discounted, but if it comes in at 0.6%, it's still a positive headline forecasting future economic growth. A lot of people that went into third quarter growth figures, retail sales, and the rest of it say the bulk of that is for increased energy costs. And then when you take that out of the retail sales numbers year-on-year in growth, it's not as robust. It's about 1.75% growth in retail sales. So that would match with our roughly 2% economic growth that the Fed is showing. The economic situation in Europe is pretty clear. A recession is on the way because they are our largest collective trading partner. They will be able to buy fewer goodies from us, which means it will hurt our growth too. The question is, can we make that up in South America, the Middle East, and Asia? Lots of stories coming out about China's economic plight, that the real estate bubble has burst. Real estate prices are off 20 to 30% over the course of a year. And China cooks their books. Even more so than Western governments do. So it can happen to them too. Okay, looking at the structure. Volume is slowly marching higher. We're definitely dealing with P's on a volume and a TPO basis across here. So we've got strength in the market. Our buy zone is 17 to 21, but I said it might take 25s to get in depending on how weak the E-mini is, and the E-mini has recovered off of its lows at 20. And we have come off, and I think we hit what, 18.5. So this 18 to 20 area is reasonable support, and that's what we were buying against. First stop after that, we should be able to get back up into this 24 area because of the volume right there. Then we'll probably quiet down and move a little bit sideways as we get into the 8:30 a.m. news. Pretty compressed trading range right now. We do have news. We do have a Spanish debt offering this morning that'll be reported, and I don't imagine it will go well. And that bad news will be out of the way. So there's a lot of stuff going on. When you read the a lot of the opinions, some of the largest stock houses and market mavens are still 1.5 to 2% growth. Worst case scenario, and some of them pushing the 2.3, 2.5 for 2012. When you read the people that follow Europe and our debt situation, they're predicting collapse in 2012. And we don't know who's going to be right. The Fed has been pretty good on their economic calls, assuming that they don't have a meltdown event in Europe. So Europe right now is the biggest problem. Okay, an outside in trade. There's one for you. Here's your second one. Market traded back up to 23.5. Got within a tick of our 24, just as expected. Our buy zone is 17 to 21. And to get much higher than 24, we're going to have some need some help from the news on the half hour. Yeah, I think the Democrats just once again proved how they're just vastly superior at playing the political game. So if they didn't come to an agreement on the cuts, then they were going to take $500 billion out of Medicare and $500 billion out of defense. And with the backing of the mainstream media, that would be laid, or they hope it would be laid on the Republicans' feet, helping get them back in, keep their current position. So both of those cuts would be fraught with danger. Isn't it amazing that over 10 years in a $4 trillion budget, you can't find $120 billion per year to cut? I mean, in real cuts. I mean, it is a joke in the most absurd proportions. I mean, it makes no sense. I mean, if you had $40,000 salary and you were asked to cut $1,200, you could probably find it. I mean, it doesn't make sense. So, yeah, it has nothing to do with debt retirement. So, it's I mean, it's just like a bunch of damn kids running the ship now. We need some adults. There are some real tough decisions coming for us. I mean, you are going to have to roll back entitlements. You are going to have to roll back retirements that have been promised. I mean, all sorts of stuff is going to happen. If you don't, it collapses. So, like I said, it's a good thing we know how to play the short side of the market. But anyway, we have an initial target of 24. Top of value is 27. So I imagine don't think we can get through 27 before the news. And it'll take some help from the news and help from the E-mini. To get there, in my opinion. Hey, the privileged class never gets anything. They have their own doctors. They have their own retirement in the United States. They are not subject to inside trader laws. They are not subject from the revolving door of Washington to the Northeast and lavish salaries. So do as I say, don't do as I do. But it's pretty hard for anybody to ignore the fleecing that's going on and the magnitude of the pigs at the trough. You know, and the sad thing is taxpayers fund all of that. Taxpayers pay for the vested interests that spend money to get the politicians they want into the office. Okay, Gary Richmond, are you in the room? Where might resistance lie? Now, I'm going to do it for you, but you can certainly see this too. You've got a low volume. Here's a market number at 1240. Here's a low volume number at 1241. The last rotate up was in N period, so resistance is 40 to 41. Now, because the E-mini is sloppy, I make that a 42. Got it? The next market number is at 35, right here. We got the top of value at 36.50. We have the last rotate up in Q period at 36.50. So the second resistance point is 35 to 37. See it? Then we have a market number at 30. We've got a low volume number at 30. We've got the weighted volume mean at 30. We have the last rotate up in V period was 32. So that's 30 to 32. Got it? Now, GR, those should have been, were your numbers close to this when you went in and did your work this morning? When I did the numbers this morning, we were trading at 22.23, so I had support at 20 to 18, picking up this area right here. Then I had 15, a market number, to 13. And then I had 7 to 10 for 3. I didn't say it was the last rotate up. I just said there was an end period high. I pay attention to KL and MM, MN, rotational highs and low. Last hour of the day session in the financials, hour after the day session closes. It also picks up the last hour of trading in the E-mini. So you've got resistance right here at 50. Well, I wouldn't argue that. And with a 25 plus average daily trading range, if 20 holds as support, that puts you in the 45 to 50 area pretty easily. So, I mean, that's where my numbers came from. And if you're a little wider, that's not all bad. I mean, you've thought about the number, you've thought about the trading range, you've thought about the rotations. And Gary, the important thing is that you go through this process and you pick out your own numbers. And that means you've looked at it. You thought about it ahead of time, and you're prepared to act. You're not going to sit there and ponder when you get to those levels. You're going to take your signals. And that's the importance of this exercise. Whether your numbers get, and I know it drives you crazy if your numbers aren't exactly where mine are, but they really don't have to be. What's important is that you've looked at it. Okay, here's our infamous V bottom. We know most moves are over in how many bars? 3 to 4. So we've got this last push. There's your third bar. We've got compression. So for those of you that are trying to figure out how to play potential V bottoms, we got a high of 33. We got a low of 20. Very difficult to get much over 10 and hold it without a piece of news. We've got 3 to 4 bars right here. We've got compression. We've got a mode mean flip. So buy stopping in here is what you would do if you were short. And then we don't, this is not a bad trade, selling it to come and take this out of the way. But we do have a bar right here where it is closed above the preceding bar's high. What does that mean in a downtrend if you've got a bar that closes above the preceding bar's high? Headache time. Means the move's probably over. We're probably heading into consolidation. So when you see this close above the preceding bar's high, it's okay to take a short. But if it doesn't develop, you want to go long right here, or at least exit your short in anticipation of a move up. And where might the market go? That was support. Perhaps it's resistance. It turns out to be resistance, and the market comes back, and where does it stop? Stops at the value area low. So you know where the market is most likely to go. I won't say with 100% certainty well before the fact, and you can profit on this if you're just paying attention to what's going on around you. I mean, you can read the action off this particular chart right here pretty well. Okay, Dan, I assume you want me to go to the F2 screen. Okay, right here, you're looking at a B. Right here, you're looking at a P. That's one way to see them. Okay, a lot of people get hung up on just P's or B's. You got to watch which way the volume is moving through the distribution. So when you look at this distribution, if you're looking at the TPOs, the longest line of letters is here. So you could say there's more letters in the top half, and that's where most of the world would see it. They'd say, well, we're looking at a P, put in backwards. If you look at the volume, it's a different story. And volume always wins. So on volume, you got a B, and that's the beauty of this software. And most of the world is seeing a P. Now, what this reverse P means is if we come down here and we don't extend this range in the day session, then somebody's going to cover their shorts and take it up. And then Gary's numbers, right up in here, this 45 to 50, start to make more sense. Do you see that, Dan? Volume always wins. Okay, we have news in 7 minutes. Looking for 395 on jobless claims. Housing starts 604. Permits 603. Then we won't have news till 10 Eastern. Back in a few. Actually, I'll talk about the news, and I've got to leave. I've got to go down and get go to the doctor's office and start the physical process. So I will not be here for the 8 o'clock update, but Bill Thomas and JB will cover for me later.